You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we peer beyond our traditional stomping grounds of your VIX and your SPY and your Tesla options and look a little bit farther afield, see what's going on in them thar crypto markets, talking a little bit about Bitcoin, ETH, a whole bunch of altcoin, the volume, the volatility, the skew, the unusual options trades, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network on which so many of you are binging these days. Had to move things around a little bit, had to rotate our advisor's option into its monthly rotation last week. So no Crypto Rundown last week, but we're back hot and heavy this week after our little hiatus last week, ready to dive into some interesting crypto action out there. And we have a great guest joining me to help me do just that. So let's roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond and proceed to pick their brains for the benefit of you, the listener. And today's guest is returning to the program for the first time here in 2022. He is RAYNE Steinberg, the founder and CEO over there at ARCA. RAYNE, welcome back to the Crypto Rundown program.
Thanks for having me. Great to be here.
RAYNE, the last time you joined us was back at the end of June of last year. A lot has happened since then. By the way, on your last appearance, Bitcoin closed out at about 34,472. So it's actually almost exactly 10,000 points below where we're trading right now. Obviously, since then, a lot has happened. Right after your appearance, we kind of continued to sell off. We were kind of in the midst of last year's big sell-off. Then we saw, of course, the big rally to new all-time highs towards the latter portion of last year in November into December. Then since then, of course, the subsequent aggressive sell-off we've seen yet again out there in crypto assets. So catch us up. What's been going on in the world of ARCA in these last 6 or so months since we've chatted as the crypto markets have been moving fast and furious, RAYNE?
Sure. I think just for a second there, though, it is helpful to pause when you mention that we're about 10,000 dollars up from when we last talked, and we can all agree it was a very smooth, straight ride from then. But that's kind of the point of this. If you zoom out a little longer, it actually does look quite less volatile. But as far as ARCA goes and what we're seeing, ARCA is an institutional grade asset manager. So from our beginning in 2018, we've always concentrated on institutions. So that's either high net worth individuals, family offices, all the way up to pensions and endowments. And what we've seen, especially last year and now, is that cohort is getting much bigger. And their bites, we're talking about pension endowment systems that are sometimes, 200 billion plus. They're not even close to what would be a full allocation. So this whole period has actually affected them a lot less, especially in crypto, because they really don't have that much exposure, especially compared to their traditional holdings. So even though it's been quite volatile, as you can see, for our clients and institutions, this really hasn't been that meaningful. This kind of in their longer term evaluation of the space where they're just getting started.
Interesting. So they're kind of just tipping their toes in the market. So they haven't had time yet to get run over is what you're saying here, Rayne.
That is what I'm saying. And they are still taking a very long view. Like some of those groups, to give you an example, we've been talking to one group that's been evaluating it since 2018, one defined benefit pension plan, that at the time it wasn't even large enough in their mind to constitute an actual asset class. This is Bitcoin and the entire ecosystem, where now it is. And so this is all kind of within their long-term view of broad expansion. And they were looking at this as a very small part of the overall asset picture. So they're expecting it to be pushed around a little bit by, the broader picture and broader macro type of events.
Interesting. Well, speaking to said institutions and professionals out there in the crypto and indeed financial landscape, you guys have done just that. Since the last time we chatted with you, you commissioned a study on the future of securities, in particular looking at the digital asset marketplace, and had some interesting findings. So why don't you set the table for us, Rayne? Give us an overview of the survey, why you guys wanted to do this, and what's some of the interesting findings and takeaways you found from this survey?
Sure. So this was a survey we commissioned with Coalition Greenwich, and this was really about digital asset securities. So this is a subset of the overall digital asset marketplace. So everybody knows digital assets, or as most people call them, crypto, but that includes Bitcoin, Ethereum, all digital assets. And then a smaller part is registered securities. These are securities that conform to, here in the U.S., the 40 Act, and, overseen by the SEC, which is obviously a much smaller part of the overall digital assets market, only about $1 billion or about $900 million there. But the interesting thing that we saw was this was a survey that took a broad look at institutional players across the ecosystem. So you're talking about service providers, large asset managers, broker-dealers, that type of group. And what we found was there was a very high belief that the vast majority of all securities transactions, so that's bonds, stocks, 77% of respondents felt all of those transactions would be occurring on the blockchain within 5 to 10 years.
That one leapt off the page to me as well. It was a ridiculous percentage. Like you said, 77% saying most securities will be digitized and settled on a blockchain in 5 to 10 years. Now, I guess settled is the key word, because when you're talking settlement, it isn't the most rapid of processes, at least right now. We're T+3, hoping to get a little bit faster than that. But that kind of left off the page to me, because one of the things I've heard, one of the most frequent complaints I've heard in the financial and indeed clearing world, let's take the options world, for example. Obviously, we're doing, millions and millions of contracts a day. There's a lot of contracts that need to be processed every day in the world of options. And, most people think the blockchain right now it can't scale, it can't handle that scale right now. So were you surprised, like I was, Rayne, that so many people thought we'd be there just in 5 or so years?
I was shocked, to be quite frank. And we have, an interest in moving this along. We have a product that is the first fund with its shares transacting on the blockchain. So the first registered product, so similar to an ETF, who shares transactions on blockchain, but it's still so early and the infrastructure isn't there and all these things have to come together. It's kind of like the ETF ecosystem almost in the early 90s, just nothing is there yet. So the idea that the vast majority of industry participants saw this so fast, I was kind of blown away by that. And I was not expecting that at all when we commissioned the survey.
I thought I misread that page, quite frankly, when I first read it. I said, wait a minute, I'm reading this backwards maybe. But no, yeah, that's an optimism I have not seen. So that's surprising.
Yeah, I was heartened and chuckled a little bit because, this is one of the kind of the push-pulls on the regulated side where I think there's huge TAMs and huge opportunities. It's just a slower speed of adoption. We filed for this product back in 2018. It took 2 years to get exemptive relief and all appropriate. And we're still figuring out the landscape. So this is, I'm quite heartened by the fact that other industry participants think it's going to be so fast. So yes, I was very surprised at that view.
I guess they are aware of some forthcoming technological revolution that we just don't know about yet, Rayne, that's going to change the game for everybody in the next couple of years, apparently.
I'm counting on it. That sounds right.
Well, aside from that, which admittedly is a very shocking, that certainly surprised me, revelation, as someone who talks to a lot of industry participants and people in the clearing and settlement all the time, and they always say, yeah, it's not ready for prime time. Apparently, they're in the minority right now. Aside from that admittedly shocking revelation, anything else stand out to you from the results of this survey, Rayne?
I was also surprised at the number of respondents that were very focused on this. So this is traditional companies that were either extremely focused or very focused on blockchain-based solutions for capital markets. This was close to 70%. So I was just surprised that, I would suspect if you had conducted the survey a year ago, you would have had numbers in the low teens, honestly, on both focused on and the expectations. So last year, and this is what I find so interesting about last year, was this kind of transformation of the digital assets market, both securities and otherwise, from heavily retail, individuals, institutions and people that were more crypto native to a lot of institutions being involved, a lot of institutions focused on it, deploying resources, not necessarily trying to skirt regulation or, regulatory arbitrage, trying to figure out how to do this in a regulated environment. So it makes sense if 77% of respondents, feel that all security transactions are going to be settled in the blockchain in 5 to 10 years. I'm glad that a lot of them are focused on it too. So it goes hand in hand, but that's what I saw, basically a consistency across answers that show that real starting adoption of this idea that this is going to transform both financial services and regulated securities specifically.
I guess I need to get off with you right now, Rayne, and go increase my holdings in blockchain companies because apparently they're going to be scaling up massively in the next couple of years. And I need to get on this train right now. You
would not be alone in that. I mean, and where the public markets and public discoverable prices in both digital assets and, things like Bitcoin, were very volatile these last couple of months. The private markets have not cooled off at all. And I think January was another record where there was $5 billion, dollars in venture capital deployed into private blockchain deals. So there's a tremendous amount of people making that bet right now on companies that are addressing this transformation.
Well, fascinating stuff, Rayne. If people want to check out this survey for themselves and dive a little bit more deeply into the findings, where should they go? What should they do?
They should check out our website, which is ar.ca, and there's a link to it on there.
You mentioned some of the surprise findings, and also you mentioned earlier about how a lot of your institutional clients and the people you engage with over there are taking a little bit more of a broader view on this recent downturn. Of course, we have seen and are in the midst of, well, maybe not so much today, but are in the midst of over the last few months, a bit of a sell-off, a bit of a retracement out there in the broad crypto assets. We've had some guests and a lot of our listeners coming in over the past few weeks and asking if we're in the middle of what they're terming a crypto winter 2.0. I have a feeling I know what your answer is, Rayne, but from talking to all the different institutional players and everyone else out there, what are your thoughts on this are we about to fall into the precipice of another crypto winter 2.0, Rayne?
It's really hard to say on timing and things like that. It doesn't feel like it to me, though. Like I said, the transformation of kind of the industry participants and the market participants is larger institutions with more capital looking to deploy more capital into this space. And I've seen nothing just from our own pipeline and our own activity on distribution and IR that, this was a very robust month for us in more allocations. This was more people looking to allocate here than not. When you look at things like fear and greed, you were just about as high a negative sentiment as you could have, just a couple weeks ago. That was skew in the other direction. The amount of money sitting on the sidelines at exchanges, just the overall bearishness was about as low as you could get, or bearish as high as you could get, which typically, precedes a turnaround, which you can see in this space. As violent as the moves down can be, they can be just as volatile up. And you've seen just a massive turnaround over this weekend.
Yes, an intriguing one there. Speaking of intriguing, some of the data we've been crunching here, we talked about this recently on our This Week in Futures option show. I haven't had a chance to discuss the numbers here yet, but of course is the correlation data. That seems to be a more pressing topic for a lot of people out there, as for a long time the argument for allocating to crypto assets was they are completely uncorrelated to your other standard asset classes, your equities, your commodities, your fixed income. Of course, those numbers are starting to change a little bit. We ran the numbers recently, like I said, on our TWIFO program, where we compared Bitcoin to just about everything else that trades over there at CME these days, which is just about every product category you can think of under the sun. We ran them for last year, which was, of course, a very topsy-turvy year. Then we extended it back to the onset of the pandemic as well, and some interesting findings. First off, over the course of the past year, crypto was positively correlated to a few assets. Maybe some of them might surprise you, but not very strongly. We saw about 26% correlation from Bitcoin to the Russell 2000 last year. Russell 2000, of course, small caps was a very aggressive year for them until, of course, the end of the year. We saw some interesting downturns as a result there. Bitcoin versus copper was a surprising one. We see Bitcoin talked about as digital gold a lot, not so much digital base metals, yet 25% correlation to copper. The correlation to gold last year actually was almost completely uncorrelated, -2%. So there really was no strong correlation between Bitcoin and gold last year. Bitcoin versus the S&P, which is one everyone focuses on, right around 24% last year as well. A few other product categories were kind of intriguing. The pound, the British pound, 19% correlation to Bitcoin, and Bitcoin versus RBOB, which is, of course, in the energy category there, 18%. So we had some slight to non-correlations there when it comes to the rates complex, the 30-year -8% and the 10-year -6%. Now, when we expanded that data to go a little bit farther back to the beginning of the pandemic, really the massive sell-off that kicked off the pandemic back in March of 2020, we see those correlations get a little bit stronger. 33%, so pretty much a third correlation between Bitcoin and NASDAQ and the Russell 2000. 31% for the S&P 500. Copper, still strong over that time, 28%. RBOB, same thing, 27%. So the correlation between RBOB and energy and Bitcoin in general has had a surprising correlation. Silver, 26%. Live cattle was a surprising one, 18% since the start of the pandemic, which was ironically exactly the same as gold, also 18% since the start of the pandemic. So this argument that Bitcoin is digital gold may be a little bit overdone. But there has been a lot of people, and have been a lot of people, Rayne, recently talking about these correlations and how, in general, the correlation between, let's say, Bitcoin and the major indices has been increasing rather than decreasing in recent years. I know you guys over there at ARCA put out some thoughts about this recently, and in general, the state of correlation between crypto and the major asset classes. What are your thoughts on what we're seeing out there right now, Rayne?
Sure. We spend a lot of time thinking about this, and just to contextualize, where the most of our asset management products focus on other assets, we obviously pay attention to Bitcoin, and especially as it indicates market sentiment or broader narratives, it's still the most powerful one in this space. What we've found, though, when we talk about correlations is through short periods of time, Bitcoin has been correlated to all sorts of things, and even higher than the correlations that you guys bring up. There's been the won, gold, right now, equities inversely correlated to the VIX. Like you said, the energy complex, rates, things like that. This has happened over periods of time where you've had even stronger correlations than the one that you mentioned, where the narrative then becomes Bitcoin or digital assets are no longer correlated or no longer uncorrelated and are correlated to this thing. But what we've actually found over any extended period of time is that those correlations have broken down. And what I mean is they might be correlated strongly to one thing or another. That consistent trend has not held. So we've had periods where it's very strongly correlated to gold, very strongly correlated to money supply. There was a funny post on it being correlated to avocados strongly. We can all know the Bitcoin avocado tie is very strong. But the point really is that though over long periods of time, and that's relative when you're talking about an asset class that's only been around for 13 years, that there has been no long-term correlation. And that's what's really interesting to people. So it still really has demonstrated to be an asset of an uncorrelated nature over a longer period of time. And I think it's the same way when you look at, the volatility when you zoom out and considering where it started from and kind of the size of it. So both of those things, when you zoom out to, 6 months to a year and rolling periods, that volatility smooths, and so do those correlations.
Yeah, some other data that may inform a little bit of that as well. Of course, some of the people have been labeling this increasing correlation, at least in the near term right now, and the fact that more people are starting to, as you mentioned at the top of the show, they're large funds and other traditional players in the equity space and fixed income space are starting to dip their toes in the crypto water. So if the same players are owning both, you might see more correlation as they're forced to liquidate both at the same time and those sorts of things. And we have seen something similar along the lines, too, when it comes to retail and just in general, the U.S. percentage of Bitcoin volume that's going up in U.S. trading hours. That has also been increasing markedly just over the last few months out there. At the end of last year, Bitcoin U.S. trading hours was mostly about a third of that was going up in U.S. trading hours in terms of Bitcoin volume. For most of this year now, that's been closing in on 50%, about 44% or so of the volume. So that also can impact the correlation. We're seeing a lot more volume going up in U.S. hours, which of course translates to U.S. traders putting that up, and that's going to have a whole bunch of other impacts on correlation. Another interesting finding before we get off the looking back on 2021 numbers is that another survey here, this was a survey by Huobi Group, who of course operates the Huobi exchange out there. They took a survey. They found that 70% of U.S. crypto holders just started investing in crypto in 2021. So that's also a lot of new entrants in the space, also going to wreak havoc with some of those correlation numbers, even though most of those, about roughly half, 46%, saying they have $1,000 or less in crypto. So we're not talking about whales out here yet, but intriguing stuff. So obviously, RAYNE, that's probably going to wreak havoc on some of those correlation numbers as well. A larger percentage of Bitcoin volume going up here in our U.S. hours, as well as a onslaught, a juggernaut, a tsunami of new participants diving into these markets here last year, RAYNE.
Yeah, I agree. This is, I think if people remember that this is still a relatively new asset class. So, the difference of this from something 13 years ago at the beginning when this did not exist, the type of people that were involved with it, something that didn't even have an observable price in dollars, is quite remarkable. We don't really have a lot of things that look like that are trillions of dollars now that, weren't even imagined about a decade ago. So the type of people that are involved in it, and last year was a very big deal, like you said, onslaught of investors, both big and small institutions, retail, just the changing dynamic of that investor base, the geographic locations, other things. These are all very big moves. But when you think about the newness and the relative size of it, and it's also on the size of it in comparison to the overall economy, all of these things can cause very, very big swings in price, correlation, things like that make sense when you think about those big changes, but will continue, I think, to smooth over time as those relatively gets smaller in comparison to where it is.
Yeah, we've had a number of guests recently come on the show and talk about their early days investing and trading in Bitcoin, and it just felt like a shady process. You had to wire money to places like Mt. Gox, and the whole thing felt like it wasn't exactly above board. And so the notion of an asset like that, which has grown to what it is now, back in those days, you couldn't even really conceive of a major fund doing that. And now we're seeing that it's readily available on major platforms like Coinbase. So it's not surprising that some of that correlation would increase. It was the definition of a subset that were owning Bitcoin back in that. I can't even really say trading. It was mostly owning. So you're right. The notion that the correlation has increased, probably not that surprising. But Rayne, I appreciate you coming on today to share the results of your survey and some of the other interesting findings you guys have unlocked over there at ARCA. But before we go, if you have any other interesting maybe surprises or hints or teases up your sleeve from what people can expect from you guys over there at ARCA, now is the time, Rayne. The floor is yours.
Sure. This goes into our Securities side of the business, ARCA Labs, our innovation arm. We have a bunch of products that are really right on the doorstep on use cases for digital asset securities, in settlement, insurance, use cases like that I think are really going to surprise people. And when we're able to announce them, are going to be very interesting to people that are looking at this asset class.
And one more time, Rayne, if folks want to check out what you guys are cooking up over there in the land of ARCA, where should they go? What should they do?
Our website, ar.ca. If you're a qualified institutional buyer, click invest with us, and one of our IR and customer success team will reach out to you. We had put out a ton of educational content. You can sign up to our newsletter. Everything we talked about on the correlation side, we put out from our CIO, Jeff Dorman, today. And anybody that was interested in that can get that in their inbox every Monday. So just sign up for our newsletter and get more great information like that.
Yes, we've had Jeff on the show before, and it's a good read. I encourage you, if you're intrigued by that correlation data and breaking it down and maybe putting it in some context, I encourage you to check out Jeff's work there. And, of course, give him a follow on the old Twitter while you're at it, at ARCA. ARCA is the place to go. Meanwhile, we have to go into our next segment. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. Of course, talking about the big dog, which is Bitcoin. We just did some of that on the last segment there, obviously talking about the correlation levels. It is an intriguing subject, one that's getting a lot more play right now, so I don't think it's going to be the last time we're going to talk about Bitcoin and this correlation to major assets. But if you're just diving into Bitcoin expecting it to be back like, the old days of Mt. Gox where it was completely uncorrelated, the only people who owned it were IT managers and people who were knee-deep and hardcore into the crypto tech side of the scene, a little bit of a different beast these days is all I'm saying. Speaking of what I'm saying, let's see what Bitcoin's up to right now. Like I said, it's about almost exactly 10,000 points higher than where it was on Rayne's last appearance. Coming into the start of the show, it was right around 44,500. That puts it up about a little over 8,000, about 8,200 or so handles from this time last week. And that high, pretty much the high it hit was 44,500. That was earlier this morning, and the low for the week came on last Thursday, February 3rd, 36,200. Of course, we were off for 2 weeks out there as well, so we had a little bit of a longer period, a little bit of a hiatus there on the show from last week. But we also, let's break down the vol a little bit, and we're not seeing a whole heck of a lot out there on the crypto screens over the course of this past week, so we have seen the vol continue to come in. This has kind of been a trend out here in Bitcoin for a while. We see the vol spike for whatever reason, maybe you have an aggressive sell-off, some aberrant news, something along those lines. So the vol can spike, it can get frothy, but it tends to come off again. That's pretty much what we're seeing right now. On our last show 2 weeks ago, the vol was a whopping 78. People thought that was pretty low then, but all they had to do was wait a couple of weeks, because now coming into the start of today's show, we were at a 65%, listeners. So, listen to some of our other programs. And again, go check out our TWIFO, This Week in Futures Options program, because it'll help you put this asset class in some context in terms of volatility and trading activity and everything else compared to things like natural gas or the equities or the metals or a whole bunch of other product complexes out there. You'll see how that vol stacks up to something like the VIX, which is hanging out in the low 20s right now, or nat gas vol, which is going to be a little bit even frothier than this out there right now, or crude oil, which is probably around a 30-odd% right now. So it's still frothy compared to a lot of major asset classes out there, but not quite at the lofty levels it was not too long ago. BitVol, which is, of course, Simon Ho's Bitcoin VIX, effectively. That was at about an 83.5 on our last show. It's down to about a 72 right now. Speaking of analytics and everything else like that, all this data coming at you, courtesy of our friends over there at Genesis Volatility. You know where to go to find out more. GVOL, GVOL.io is the place to go to kick the tires and light the fires. And trust me, if you're interested in all this stuff, the correlation data, the skew, the OI changes, what's been happening from an historical vol perspective, you want to break it down by product or by venue, you can do all of that. You can go down a rabbit hole for hours down there. A very good rabbit hole because it's interesting stuff. But gvol.io is the place to go to begin your journey to the dark side of crypto analytics. If you did such a thing, you would see that the skew has changed markedly out there in Bitcoin over the last few weeks as well. On our last show, it was nearly a -8. We were still kind of aggressively in the teeth of that sell-off, listeners. Now it's down to about a -2, about -1.7. It swung about exactly 6 points to the north, so not quite as bearish as it was on our last episode. Simon's bit skew reflecting something similar as well. It was about a 92.5 on our last show. This show about a 91 and change. So coming in a little bit out there as well. Again, you're talking about a bit skew type number. Same thing with the CBOE skew index. Sometimes it's hard to put all that movement in both the calls and the puts and crunch them down into one number. Certainly a challenging thing for index calculators like that. Looking at the open interest, of course, since the last time we chatted, listeners, January has rolled off the tape. Took quite a bit of open interest with it, over 55,000 contracts with it. So these numbers are going to be a little bit lower than our last show. In fact, coming into showtime, we had less than 100,000 calls open on Deribit right now. That's about 96,200. That's down almost exactly 20,000 contracts from this time 2 weeks ago. The puts at a little bit shy of 60K, about 59,700, puts them down about 5,300 contracts from this time last week. So OI is kind of coming in across the board. That means we look at where you guys are lining up from an expiration perspective. It's back to March. That's the big dog out there right now. Nearly 50,000 contracts open in March, about 49,400. It's up about 5,400 from this time 2 weeks ago. February sliding in there at number 2, though, with about 30,000 exactly. It's up about 6,500 contracts from this time last week. And number 3, back out to the quarterlies. It's June, 28,200. That's a newcomer, obviously, to our top 3. So we'll see how June continues to grow over the coming weeks and months. As this OI rolled off the board, let's see if that's shaken up the hot strikes, the big open positions. What's open right now in Bitcoin options? Well, let's find out. I'll start from the bottom. Number 5 is actually the par strike, the 100,000 strike. That's still in the top 5, listeners. It's only about 8,300 contracts open. So that's come down a little. It's come down about 500 from our last show. And, of course, since December expiration has come down quite a bit from where it was then, but still managing to cling on to its slot there in the top 5. Number 4, the 60,000 strike, 8,600 contracts open. That's a newcomer, actually, to our top 5. And number 3, the 40,000 strike with almost exactly 10,000 contracts open, 9,900 to be precise. That's up 1,900 from this time last week. And then number 2, we have the 30,000 strike with 11,000 contracts open. That's actually exactly unchanged from our show 2 weeks ago. And number 1 right now, the big dog, is the 50K strike. It has 12,000 contracts open. It's up about 1,000 from this time last week. So it has been interesting to watch the evolution of these size positions ever since December, because it's been dominated for a long time by the par and the 200,000 and some, shall we say, ridiculous strikes, quite frankly. And a lot of that you could tell was legacy paper. Now that a lot of that has rolled off the board, we have seen room for some new, dare I say it, more relevant strikes and positions to make their way into the top 5. And that's what we're seeing out there right now. 30,000, 40,000, 50,000, and 60,000. The only really outlandish strike there is the par strike there. So a little bit more relevant strikes lighting up the top 5, which I like to see. It's more meaningful, I think, for a lot of you guys out there than seeing how much OI is on the 200,000 strike in Bitcoin, for example. In terms of volume, what's been lighting it up out there on Deribit since our last show? The biggest day was actually our last show day, January 24th. 37,000 contracts went up that day. And after that, we have to go back to a few days ago, February 4th, with about 27,300. Those were the two most active days. The rest of them kind of quiet. It hasn't been the most active period in terms of Bitcoin options over the last few weeks. And we've seen that going up over there on CME as well. Only about 45 contracts going up on the most recent trading day, which was Friday. And that OI has ticked down about a couple hundred contracts to about 1,500 contracts. Same thing on the futures. The futures are kind of drying up. There's only 10,000 contracts open on the CME big futures, and that's down 2,000, and only about 11,000 traded on Friday. That's a far cry from not that long ago, a few months ago. Everyone thought, oh, BITO, we're going to be blowing the doors off position limits pretty soon out there in CME futures. And at least so far, that OI has continued to shrink week after week, which is interesting. Similar story there on the micro Bitcoin futures. We saw decent volume on Friday, about 32, almost 33,000. So the activity has remained robust, but a lot of OI went off the board, it seems like, with January. That OI has dropped 17,000 contracts since our last show. It's down to only 13,200. Of course, if this volume keeps up, it seems like micro futures can easily do 30,000 at a clip. Then we'll probably see that OI reposition. Speaking of repositioning, let's see what you folks are up to on the other side of the market. It is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's do it. Let's explore the top 10 out there in the altcoin universe. First, number 10, it's the old Doge, hanging out still in the top 10 with about 22, almost 22.5 billion worth of market cap. Number 9, it's Luna, 23, almost 23.5 billion. Number 8, good old XRP, 38 billion, pretty much exactly. Number 7, Solana. It's been some interesting evolutions out there in the Solana market over the last couple of weeks. Solana good for about 38.25 billion worth of market cap, so just barely managing to edge out XRP. Number 6 is Cardano, almost 40 billion, about 39.9 billion out there. Number 5, good old USD coin, hanging out at 51 billion. Number 4 is Binance coin, 72.2 billion worth of market cap. Number 3 is Tether, about 77, almost 78 billion. You know what number 2 is? It's E, 379.6 billion. And number 1, good old BTC, looking a little bit firmer this week at about 840 billion. Still, of course, well shy of the 1T level that it hung out at for quite some time last year. Coming into today's show, ETH was a little bit shy of 3,200, about 3,179. That's pretty much its high for the week earlier today, almost 3,190. On our last show, it was 2,353. Hopefully you loaded up on some down there, listeners. It's been a nice little pop in ETH. So it's up about 826 handles from that last show. The low was actually on our last show 2 weeks ago, 2,353. Outside of that, in the last week, the low was about 2,579 or so. And looking at the vol side of the landscape, kind of the same story as what we're seeing in Bitcoin, only ETH vol coming off even more aggressively. It was at a 94% on our last show. Coming into today's show, 74%, coming in a whopping 20 points over the past few weeks. That's a lot for ETH vol to come in. In terms of skew, the last show was predominantly negative, negative 10. That has mitigated as well, down to about a negative 4.3 now. OI, we've actually seen kind of a mixed bag, even though we saw Jan roll off the board, take a lot of paper with it. The calls actually were still up over the last couple of weeks. About 1.37 million calls open on Deribit right now. It's up about 20,000 from this time last show, whereas the puts are down to 483,000. That's down 22,000 from this time last week. So we gained some on the calls, lost some on the puts. And in terms of volume, lighting things up, same story as Bitcoin. The most active day was actually our last show day, January 24th. 402,000 contracts lighting it up on Deribit. Outside of that, the most recent day was the 4th of February with about 319,000 contracts. Everything else markedly less. In terms of where you folks are lining up from an expiration perspective, Jan, the way the dodo took 423,000 contracts with it. That's nothing to sneeze at. That means March is now firmly number 1 with 584,000 contracts, actually up about 36,000. June number 2, 419,000 contracts, opens up about 73,000. And February sliding in there at number 3 with 323,000. And in terms of where you folks are lining up, we're the size position in ETH options right now. Let's go to number 5 as well. It's the 10,000 strike, so very similar to Bitcoin, the most optimistic strike at the bottom there. 103,000 contracts open there. That's actually down about 3,000 from this time last week. Number 4 is the 15K strike, so even more optimistic with 106,000 contracts open. That's weirdly enough, that one's unchanged from 2 weeks ago. Number 3, the 4K strike, 111,000 contracts, up 11,000 from this time last week. Number 2, the 20,000 strike, also 111,000, so kind of a tie for 2/3 there. That one is unched. And the big dog out there in ETH right now, the 5K strike, 113,000 contracts. That's a newcomer to the top 5 there as well. So the 5K strike fighting its way there into the top 5. In terms of ETH futures, that's actually been pretty active over there at CME. 9,500 going up on Friday. The OI it's still down, though. Stuff rolling off the board from January, down to about 3,300. It's down to about 800 from our show last week. The micro ETH, though, have managed to continue to put up numbers that are pretty much similar to what we're seeing on the micro Bitcoin futures. We saw 32,000 trading on Friday, and the OI continues to grow. That's up 2,000 to nearly 33,000. Interesting how the micro ETH futures have continued to resonate. Remember, these things just launched on December 6th, so we're talking pretty much 2 months ago at this point, and they've already got an OI of about 33,000. So nothing to sneeze at out there in micro ETH land on CME. Speaking of micro, let's look at some of these other smaller altcoins, see what's lighting it up out there. Let's start with XRP coming into today's show, 79.2 cents. It was 59.2 on our show 2 weeks ago, so nice 20-cent pop. So that's nothing to sneeze at. Doge getting a lift as well, up 3.6 cents from our show last week or 2 weeks ago. It was 13.24 cents. Now a little bit north of 17 cents this week. Litecoin 2 weeks ago, 107, about 107 and a third. This week, 137 and a half, so up over 30 points this week. Cardano 2 weeks ago was 106. This week, 119, so up 13 cents. Polkadot 17 and a half bucks 2 weeks ago, 22 and a half today, so up almost exactly $5. And Solana, like we said, had a bit of a kerfuffle over the last couple of weeks, but getting it back now. It was a little bit shy of 89 on our last show, 88.95. Today's show coming into is a little bit shy of 120, so up about 30, almost 31 points from this time last week. And let's do a little bit of Shiba love as well, because it's had quite the run. This is the last 24 hours, up about 45%. It was about 0.000032 coming into today's show. That would put it up from the 0.000021 that it was on our show 2 weeks ago. So if it keeps on this trajectory, 45% a day, I know a lot of our listeners there are going to be looking at their Lambos in the live chat pretty soon. So I know they're all pretty excited about that. All right, everybody, that music means that's going to do it for this episode of the Crypto Rundown. I want to thank RAYNE STEINBERG, the founder and CEO from ARCA, joining us here today. Check out their survey and everything else they have cooking over there at ARCA, and give them a follow on the old Twitters as well, at ARCA, A-R-C-A, all one word. If you want to talk to them about correlation and everything else, we've had RAYNE on, we've had Jeff Dorman, their CIO. He also wrote a lot of that correlation data. Also, we had their ARCA Lab subsidiary on the show. There's a lot of interesting stuff cooking over there at ARCA. I encourage you to check it out. And of course, you know where to go to learn more about all of these analytics we talked about today, and run the numbers for yourselves. Gvol.io, Gvol.io is the place to go. We got to get on out of here, but we'll be back again tomorrow, bringing back the Flow Master for our secret club members for a little bit of the old pro Q&A fun. Get those questions in now. Should be fun. Wednesday, our Education Wednesday, Options Bootcamp, Options Playbook Radio, so you get a nice twofer of education. I know for a lot of you out there, these options things are still a little new for a program like this, so you should be checking out Options Bootcamp and Options Playbook Radio if you haven't done so already. It will help you grow your familiarity with these options things we're always talking about. And of course, Thursday, This Week in Futures Options, a program that is very much relevant for the audience of this show, because we do dabble in crypto, and as well as how it stacks up against a lot of other commodities and assets out there. Friday volatility views, and of course, all our secret club fans and friends, options oddities. Then back again next Monday, another episode of the Crypto Rundown. We'll see you then.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.